Welcome back to the channel. Today we're diving into the top 5 small cap stocks you should consider adding to your portfolio this October 2024. Remember, I'm not a financial advisor, this isn't financial advice, and these are just some interesting companies that I found. You should always do your own research and due diligence before investing in anything. Now, small cap stocks are generally considered to be companies with a market capitalization between $300 million and $2 billion. These companies can often be overlooked by big institutional investors, which means there's potential for retail investors like you and me to find some hidden gems with massive growth potential. I've done my homework and I've identified 5 companies that I believe have what it takes to outperform in the coming months and years. We'll be taking a deep dive into each company, looking at their financials, their management team, their competitive advantages, and of course, their growth potential. First up, we have Company A, a company that's absolutely killing it in the industry sector. This company has been making waves with its innovative approach and strategic vision. Now, you might not have heard of Company A before, and that's understandable. They've been flying under the radar for a while, but that's about to change. They've been quietly building a dominant position in their niche, focusing on creating value and delivering exceptional results. They've got a rock-solid business model with consistent revenue growth and strong margins. Their financials are impressive, showing a steady upward trajectory. Plus, their management team is top-notch, with a proven track record of success. The leadership is experienced and has a clear vision for the future. I mean, just look at their CEO name. This individual has a remarkable background and has led the company through various challenges. This is someone who's been there and done that, and they're not afraid to take risks to grow the business. Their strategic decisions have been spot on. But what really excites me about Company A is their future potential. They are positioned to take advantage of emerging trends and market shifts. They're sitting on a massive opportunity in a rapidly growing market. The potential for expansion is enormous and they are ready to seize it. And with their innovative products and services, I think they're well positioned to capitalize on this growth. Their offerings are cutting edge and meet the needs of a modern market. Now, no investment is without risk, and Company A is no exception. It's important to be aware of the challenges they might face. They do face competition from larger, more established players. However, their unique approach gives them a competitive edge. But I'm confident that Company A has what it takes to compete and win in this market. Their strategy and execution are top-notch. They're nimble, they're innovative, and they're laser-focused on execution. Their ability to adapt and innovate sets them apart. I recently added a small position in Company A to my own portfolio, and I believe in their long-term potential. And I'm planning to add more if the price is right. Keeping an eye on their stock performance is crucial. I believe this company has the potential to be a multi-bagger over the next few years. Their growth prospects are incredibly promising, and I'm excited to see where they go from here. Next up is Company B, a company that's perfectly positioned to benefit from the explosive growth of the industry trend. This trend is revolutionizing the industry, and Company B is right at the heart of this transformation. This trend is only getting bigger, and Company B is at the forefront. With each passing quarter, the industry is expanding at an unprecedented rate, and Company B is capitalizing on this momentum. They've developed a unique technology that allows them to explain Company B's technology and how it relates to the industry trend. This technology not only sets them apart from their competitors, but also positions them as a leader in innovation within the industry. This is a game changer, and it's already attracting a lot of attention from investors. The buzz around Company B is palpable, and it's easy to see why. Just look at their recent earnings report. The numbers speak for themselves, showcasing a company that is not just meeting but exceeding expectations. They absolutely crushed it, beating analyst expectations on both revenue and earnings. This kind of performance is rare and highlights the company's strong operational execution, and their guidance for the next quarter was even better. They are projecting continued growth, which is a testament to their strategic planning and market positioning. This is a company that's firing on all cylinders. Every department from R&D to sales is contributing to their success, creating a cohesive and dynamic business environment. But here's the thing, even with all this growth, Company B is still relatively undervalued compared to its peers. This presents a unique opportunity for investors looking for value in a high-growth sector. Their price-to-earnings ratio is significantly lower than the industry average, which tells me there's still plenty of room for growth. This undervaluation could be a hidden gem for savvy investors. Of course, there are always risks to consider. Market dynamics can change, and external factors can impact growth trajectories. The industry trend could slow down, or competition could heat up. These are factors that every investor should keep in mind. But I believe Company B has a strong enough moat around its business to withstand these challenges. Their robust infrastructure and strategic initiatives provide a solid foundation for long-term success. Now let's talk about Company C, a company that's redefining the industry with its innovative products and services. They've completely disrupted the traditional way of doing things, and they're just getting started. Their flagship product name is a game changer. It's described the product and its benefits. And the best part, it's selling like hotcakes. But Company C isn't a one-trick pony. They've got a whole pipeline of innovative products and services in the works. They're constantly innovating and coming up with new ways to serve their customers. This focus on innovation is what really sets Company C apart from the competition. They're not afraid to challenge the status quo and come up with new and better ways of doing things. Now, Company C is still in the early stages of growth, so it's important to keep in mind that there's more risk involved compared to a more established company. But for investors who are looking for high growth potential, Company C is definitely worth a closer look. Moving on to Company D, this company just made a major announcement that has me incredibly bullish on their future prospects. They just described the recent news or development. This is a huge deal for Company D because it explained the significance of the news or development. It opens up a whole new market for them and positions them for explosive growth. The market clearly agrees as Company D's stock price surged after the announcement, and I believe this is just the beginning. This news has the potential to be a major catalyst for the company, driving significant growth in the coming quarters and years. But even before this news, Company D was already a solid company with a strong track record. They've consistently grown their revenue and earnings, and they have a solid management team in place. With this recent development, I believe Company D is now even better positioned for success. They're attacking a massive market opportunity with a differentiated product and a proven business model. Last but not least, we have Company E, a company that stands out for its rock-solid financials and impressive stability. This company has consistently demonstrated its ability to maintain a strong financial position even in the face of economic uncertainties. In this market, it's more important than ever to invest in companies that are built to last. And Company E definitely fits the bill. Their commitment to financial prudence and strategic growth makes them a standout choice for any investor looking for long-term security. They have a fortress balance sheet with low debt and plenty of cash on hand. This robust financial foundation allows them to navigate through challenging times without compromising their growth potential. This gives them the financial flexibility to weather any storms that may come their way. Whether it's an economic downturn or unexpected market volatility, Company E is well prepared to handle it all, and believe me, in this market you can never have too much cash. Having substantial cash reserves not only provides a safety net but also opens up opportunities for strategic investments when the time is right. But Company E isn't just about playing defense. They're also investing heavily in growth opportunities. Their proactive approach ensures that they are not just surviving but thriving in a competitive market. They're also investing heavily in growth opportunities. From constructing new facilities to developing innovative products, Company E is always looking for ways to expand and improve. They're expanding into new markets, developing new products, and making strategic acquisitions. These moves are designed to enhance their market position and drive future growth. This balanced approach is what I love about Company E. They understand the importance of maintaining stability while pursuing growth, ensuring that they are well positioned for long-term success. They're not just focused on the short term, they're playing the long game. Their long-term investment strategy is designed to create sustainable value for shareholders. They're building a sustainable business that can generate value for shareholders for years to come. Their commitment to sustainability and responsible growth is evident in every aspect of their operations. And the best part? Company E is still relatively undervalued by the market. This presents a unique opportunity for investors to get in on a solid company at an attractive price. Their price-to-earnings ratio is below the industry average, and their dividend yield is attractive. This combination of growth potential and value makes Company E a compelling investment choice for those looking to build a resilient and profitable portfolio. That's it for today's video. If you found this helpful, make sure to hit the like button and subscribe for more stock market insights. Leave a comment below with your favorite small cap stock for October 2024. See you next time. Remember, this is not financial advice, and you should always do your own research before investing in any stock. These are just 5 companies that I find interesting, but there are many other great small cap stocks out there. The key is to find companies that are operating in growing markets, have strong management teams, and are financially sound. And most importantly, make sure you're comfortable with the risks involved before investing your hard-earned money.